The global cues are looking like. Let's start with the US markets, where September has ended in a completely grand fashion. The S&P 500 end at a record high, and through that entire month, which has traditionally been a tough one for equities and for US equities, it's been very positive. The reason, of course, is the Fed action and that 50 basis point rate cut, which has fueled that. So you're seeing the Dow futures also completely flat. So nothing alarming there, but the real hero really was the S&P 500. And that was also pushed by Jerome Powell. So Jerome Powell had an address last evening, India time, in which he says that there could be 2 more cuts this year. But when we say pencils in, this is all dependent on what economic data looks like. So the gist of what he says largely is that, just because we had a 50 basis point cut, don't expect the same quantum of rate cuts to follow. We could have another 50 basis point by the end of the year. That's 25 basis points each if the economic data actually merits it. In fact, let's listen in to what Chair Powell said.
Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting. As we consider additional policy adjustments, we will carefully assess incoming data, the evolving outlook, and the balance of risks. Overall, the economy is in solid shape. We intend to use our tools to keep it there. If you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
Okay, so that statement actually is the important one, which came in from Powell. As a result, bond yields inched slightly higher as well, the 10-year at 3.87%.